If you are a Kentucky homebuyer looking into USDA Rural Housing loans, we're here to guide you through the income requirements. One of the biggest questions is simple. How much income do you need to qualify? Let's break it down clearly. We are going to answer the core question of how much income is needed to qualify for a USDA loan. We will ensure you understand the requirements clearly, providing confidence in your home buying journey. The core of USDA underwriting lies in two key financial numbers called debt-to-income ratios. Let's look at what they mean. USDA underwriting focuses on two key debt-to-income ratios, which determine your ability to manage the new mortgage payment. The front-end ratio looks only at your proposed housing payment, including the principal, interest, taxes, insurance, and the USDA mortgage insurance. The back-end ratio, however, considers your total monthly debts. This includes the housing payment, plus existing obligations like car loans, student loans, and credit card payments. For most automated USDA approvals through the Guaranteed Underwriting System, or GUS, the benchmark ratios are roughly 29% on the front end and 41% on the back end. Remember, these are guidelines, not hard stop limits. Let's apply these ratios to a real-world scenario to make this concept more concrete. For example, if a household earns $6,000 per month, a 29% housing ratio equals about $1,740 for the total house payment. If their total monthly debts stay under approximately $2,460, they may still qualify. However, qualification also depends on factors like credit history, financial reserves, and other compensating factors. Not all loan files are processed the same way. We need to distinguish between automated and manual underwriting. Some loans receive an automated approval quickly through the USDA's GUS system, which speeds up the process significantly. Other files require manual underwriting by a person. These manual files typically follow tighter debt-to-income ratio limits. The advantage of manual review is that certain debts can be adjusted or excluded, such as income-based student loans or verified long-term payment reductions, offering flexibility.
Compensating factors on how to get approved for a USDA loan with higher debt-to-income ratios up to 32% house payment and 44% total back-end ratio, 680 credit score or higher, job stability, cash reserves of at least 3 months house payments saved up, long-time job stability.
The bottom line is this: qualifying for a USDA loan isn't just about income, it's about how the full financial picture fits together. If you are buying in Kentucky and want to know what you realistically qualify for, a proper USDA pre-approval makes all the difference.
For a personalized USDA pre-approval or questions about property eligibility, income limits, or underwriting guidelines, call or text me at 502-905-3708. I have personally closed over 87 USDA loans in Kentucky in my career. Contact Joel Lobb, Kentucky USDA Mortgage Specialist. Email kentuckyloan@gmail.com. Call or text 502-9053-708. Specializing in Kentucky Rural Housing Loan, USDA Rural Housing Loans. I have helped families buy over 87 homes in Kentucky. Put my experience to work for you.